Credit Suisse, a Swiss bank with large global operations, has become the latest crisis for the financial sector after its biggest backer, Qatar Investment Authority, said it won't provide further financial support. The bank had announced on Tuesday that it had found material irregularities in its financial reporting and that it would restate its 2022 earnings. Credit Suisse has failed to address its internal control and risk management issues. The bank admitted that it found material weaknesses in its financial reporting process. The bank also said it was facing legal actions from regulators and clients over its involvement in several scandals, such as the collapse of Archegos Capital Management, a hedge fund that defaulted on margin calls last year, and the fraud case of Greensill Capital, a supply chain finance company that went bankrupt earlier this month. They also said they were under investigation by several regulators for possible violations of anti-money laundering, market abuse and disclosure rules. The news sent shares of Credit Suisse plunging more than 20% on Wednesday, wiping out more than $10 billion of its market value. The move also appeared to be hitting large U.S. banks, such as J.P. Morgan Chase, Bank of America and Goldman Sachs, which fell between 3% and 5% in pre-market trading. Analysts said that Credit Suisse's troubles could have ripple effects across the financial system and raise questions about the risk management and oversight of banks. Credit Suisse is not the only bank facing challenges in 2023. Silicon Valley Bank, a U.S. bank that specializes in lending to tech startups and venture capitalists, which collapsed last week after failing to raise enough capital to meet regulatory requirements. SVB had suffered heavy losses from its exposure to risky loans and investments, such as cryptocurrencies, biotech firms, and SBAC's Credit Suisse was one of SVB's major creditors and investors. With an exposure of about $4 billion, Credit Suisse has faced pressure from its shareholders and bondholders who have lost confidence in the bank's ability to recover from its troubles. Credit Suisse was founded in 1856 by Alfred Escher, a prominent politician and businessman, under the name Schweizerisches Kreditanstalt to finance the expansion of Switzerland's rail system. It issued loans that helped create Switzerland's electrical grid and the European rail system. In 1870, it opened its first foreign representative office in New York. In 1890, it became a leading player in the Swiss underwriting and syndication business. In the 1900s, Credit Suisse began shifting to retail banking in response to the elevation of the middle class and competition from fellow Swiss banks UBS and Julius Baer. It also expanded its international presence by opening branches and acquiring banks in Europe, Asia, Latin America, and Africa. In 1978, it partnered with First Boston, a U.S. investment bank, before buying a controlling stake in it in 1988. In the 1990s and 2000s, Credit Suisse continued to grow through mergers and acquisitions with institutions such as Bank Leu, Swiss Volksbank, Winterthur Group, Donaldson Lufkin and Jenrette, Hedging Griffo and Morgan Stanley's wealth management businesses in Europe, Middle East and Africa. It also faced several scandals involving money laundering, tax evasion, market manipulation and fraud that resulted in fines and reputational damage. Here are some of them. In 1986, Credit Suisse helped Philippines dictator Ferdinand Marcos and his wife hide millions of dollars stolen from the country by opening bank accounts for them under fake names. In 1999, Credit Suisse was fined and lost its license in Japan for destroying evidence related to an investigation into whether it was helping companies conceal their losses. In 2000, Credit Suisse was reprimanded by Swiss authorities for accepting funds linked to corruption by Nigerian military dictator Sani Abacha in the 1990s. In 2004, a Credit Suisse banker was arrested for allegedly laundering money for Japan's largest Yakuza gang. In 2012, Credit Suisse agreed to pay $536 million to settle allegations that it violated U.S. sanctions by doing business with Iran and other countries in 2014. Credit Suisse pleaded guilty to helping U.S. clients evade taxes and agreed to pay $2.6 billion in fines. In 2017, Credit Suisse was fined $135 million by New York regulators for manipulating foreign exchange rates. In 2018, Credit Suisse was embroiled in a spying scandal that led to the resignation of its CEO and other executives after it hired private detectives to follow a former star banker who joined a rival firm. In 2020, Credit Suisse was found guilty by a Swiss court of failing to prevent money laundering by a Bulgarian cocaine trafficking gang, and ordered to pay $5.1 million in damages. In 2021, Credit Suisse suffered huge losses from its exposure to Archegos Capital Management, a hedge fund that defaulted on margin calls and triggered a fire sale of stocks worth billions of dollars. The bank also faced legal actions from regulators and clients over its involvement in Greensill Capital, a supply chain finance company that went bankrupt amid allegations of fraud. The bank also agreed to pay $475 million to settle charges that it participated in a scheme to defraud investors in Mozambique's tuna bonds. All of these factors have raised doubts about Credit Suisse's solvency and liquidity, as well as its future prospects as a global financial institution. Stay tuned for details to come out as this story is just breaking.